Hi, Yoel. Welcome.
Thank you very much. Pleasure to be with you today. I'm going to follow on from what Terry was saying about some of the risks facing Asia. In view of the dire global or U.S. picture, we've had to revise down, in some cases quite sharply, our 2009 growth forecasts for Asia. Of the dozen or so countries which we focus on, say about half of them will contract outright in terms of GDP, and of those which will contract, in some cases, it will be at least as bad in 1998, the year immediately following the financial meltdown, and in some cases possibly exceeding that. So certainly 2009 looks set to be an annus horribilis for Asian economies. Right now, for example, the lowest growth forecast in Asia is minus 4.9% in Japan. As you know, we had a very poor fourth quarter of 2008 figure released the other day, a 12.7% annualized contraction, which was the worst in 35 years. Just today, we saw Taiwan's GDP for the fourth quarter shrink by 8.4% year on year, which I believe is the worst on record. And in fact, we've had to lower our growth forecast for even the turbos of the region, such as China and India. Our China forecast for 2009 is 5.6%, which is less than half the 13.7% recorded in 2007, for example. And we're seeing India go from about 9% growth in recent years to 5%. Now, in terms of why this is all happening, I think it's quite clear that the Asian model of export-driven growth is the main flaw here. Essentially, in the aftermath of the 97-98 crisis, Asian currencies plunged in value, and Asian central banks determined that the best way to safeguard from a future crisis is to build up massive foreign currency reserves and current account surpluses. And the fastest way to recovery for Asia's economies was the promotion of exports. And of course, during the boom years of 2003 to 2007, this all worked fantastically well. Reserves shot up in value, exports were growing at double-digit pace, and Asia was doing pretty well. But now, precisely because of this export dependency, everything has gone into reverse in a substantial way. For this reason, we continue to expect to see more interest rate cuts, even though we've had very sharp ones already in the fourth quarter. We continue to expect currency weakness, although the ability of weaker currencies to support exports will be limited because at the end of the day, weak currencies will not necessarily compensate for weak demand in the Western world. And that in turn will mean even further losses in stock markets, despite the recent stabilization. Certainly a year or two ago, there's a lot of talk about decoupling, with Asian economies reorienting away from the US and Eurozone towards China and India in particular. I think this is not possible, essentially because Asian economies cannot decouple from the US and Europe by coupling onto China, because China itself is so coupled to the US and Eurozone. Its estimates suggest that about 60 or 70% of final demand for Asian exports ultimately is in the Western world. And essentially this rise in intra-Asian trade, which we've seen in recent years, greatly reflects the trade of intermediate goods for final assembly, and finished products ultimately have greatest demand in the US and European Union and Eurozone. So for this reason, we think Asia is going to suffer tremendously this year. And because we, as Terry mentioned, we see a L-shaped recession, our growth forecast for 2010, although certainly an improvement from 2009, are still in some cases well below what we've seen in 2008. In terms of key risks which are likely to pervade the economies, essentially we're seeing millions of jobs being lost in manufacturing across Asia. Major corporations are slashing jobs by the thousands, in some cases tens of thousands. I mentioned earlier that Japan's economy was shrinking at its worst pace in 35 years. Japan is still the third or fourth biggest trade partner of most Asian economies and major source of foreign investments. And they've shifted a huge amount of manufacturing out of Japan into China and elsewhere in Asia in recent years. Newly emerging economies such as Vietnam, for example, are very heavily dependent on investment from Taiwan and South Korea, and those are amongst the hardest hit countries. So there's very little escape from all this. Having said that, we do see still positive growth in China and India, and also the Philippines and Indonesia, amongst other things. Regarding the latter two, that's reflective of those economies are more driven by domestic demand. But I have to say that we have to disaggregate or at least break down this dichotomy between domestic and external demand, because at the end of the day, when export-driven factories shut down, then so many job losses that will in turn weigh on domestic demand. And also the other factors such as remittances. For example, remittances generate about 10% of Philippine GDP, and remittance growth is starting to slow in Philippines, and 50% of Philippine remittances, for example, are sourced from the U.S. So despite the Philippines' very strong domestic demand-driven component, still going to suffer from the external global conditions, so to speak.
Now, Yoel, there are many people who believe that when this is over, L-shaped or otherwise recovery, that Asia will probably lead the way in terms of future growth. Can you comment on that?
Well, I think there's still plenty of room for expansion. For a start, we're seeing substantial fiscal spending. We're seeing governments investing a lot of money in infrastructure and building social safety nets, job retraining, and so forth. There's also the fact that in the long term, the structural factors driving Asia, such as urbanization, increasing youthful populations and so forth, rising incomes, I mean, those long-term trends certainly having a bit of a setback. In some cases, people who move to the cities in countries such as China and elsewhere in recent years will temporarily move back to the countryside. But yeah, I think it's certainly true that beyond the recession, once the global economy picks up, those long-term trends will start to come into play. So yes, I think Asia will eventually resume its uptrend. Eventually, I mean, over the next 2-3 years. So from that point of view, I'd agree with that assertion. But that doesn't mean that we won't have this annus horribilis in the meantime.
Greg, do you have any questions for Yoel?
No, that seems sufficiently depressing for me.
I'm sorry to hear that. At this point, I think I'd like to hand over to Justin Petrie, head of Europe department, to talk about some very interesting developments, including in Russia, for example.